Welcome, and if you're new here, my name is Louis Leyva, and I love teaching you guys how to make money every single day by investing in stocks and crypto. So if you're new to the channel, hit that subscribe button and let's get started right now. Thank you for joining me today. I have a slam-packed agenda. We're gonna talk about a lot of great stuff. You're not gonna wanna miss this because this could mean the difference between you guys making some buku bucks this month or barely scraping by. So first, we're gonna start off by talking about this Lucid merger, or the CCIV stock merger that you've been hearing about, or maybe you have, or maybe you haven't been hearing about recently. And not only that, but I wanted to tell you guys that I recently got the opportunity to go to a Lucid facility, and I'll tell you one thing: that car looks totally different in person than it does on a presentation that I saw online. It's really nice. It's beautiful. And it's expensive too, a very expensive car. And the reason we're talking about it today is because we don't really even have any clarity whether the company is going to be merging with CCIV or CCIV merging with Lucid. We don't know if that's really true or if it's just rumor. But the problem is a lot of people have been spending big money on taking that bet. Now, I for one have not taken that bet for a couple of reasons, because number one, obviously, there is no certainty there. So SPACs are risky enough, not to mention a SPAC that is a maybe SPAC. I don't know what they call it. It's a maybe gonna happen. And with that being said, just look back, just not even too long ago, guys. I mean, let's take a look at Nikola, how Nikola came on the scene through a reverse merger or a SPAC, through a special acquisition company. That basically what they do is it's a blank check company that goes out there and looks for other companies to merge with. That way, the pipe investors, or the people who put the money into the original company that was already publicly traded, the SPAC company, the special purpose acquisition company, and what they'll do is they'll merge with this other company, and then the early investors that were in the SPAC will sell out their shares because now their shares are worth way more money. So really good, lucrative strategy for the SPAC people. But what about the people like you that are making the investment into these companies? You're left holding the bag because they're selling you these shares hoping these companies are going to turn a profit. Now, there are some really great SPACs out there like Virgin Galactic, Open Door. Those have been some great SPACs. Now, some bad SPACs have been like Nikola. There might have been more good SPACs this year than bad SPACs, or maybe the bad SPACs didn't catch that much attention. But the market's been up in general, so we really can't say long term how these SPACs are going to react. But this one here with Lucid, it would be a great company to own if we knew that Lucid was really going to be merging with CCIV. So most recently, it just released actually yesterday into this morning, is that Lucid was meeting with the Saudi Arabian wealth fund, who happens to have a 67% stake in Lucid, and they were talking about possibly building a second facility in Saudi Arabia, somewhere around a place called Jeddah or Jeddah. I don't know if I'm saying it correctly. It's Jeddah, I think it's pronounced. Well, that would be amazing for the company because that would help them ramp up their production big time, huge, like super huge. Because right now, the current facility where they have it located right now would only allow them to produce a certain amount of vehicles, which in the very beginning, they're short term, they're aiming for about 30,000 cars, which is not a lot. But having two facilities opening up or being active within this early in their inception would be huge for the company, because as you know, with Tesla, it took them almost a decade to ramp up to a second facility. And now with this company having two facilities and very early on, could be a really good sign for them. So if this merger does go through, the CCIV merger with Lucid, this could mean big bucks for anyone that's invested in it early on, right? I mean, I hope it does, because if it doesn't, all these people who are making such a fuss and a ruckus about this possible merger now will probably just be left kind of holding a stock that's going to trade sideways for a long time. Now, personally, I am not investing in it because it's, like I said earlier, it's too high risk. I would rather wait for the news to break that they are going to be merging, and then I would look for dips. I would look for opportunities later on for the stock to come down, pull down, even if it's not as cheap as it was when they first made the rumor, because they didn't even make an announcement. Even if it dips down to anywhere between 10 to 20 bucks, at least I know that I have 100% certainty that that stock is what I'm buying, instead of buying it now in the 20s or 27 or 25, wherever it goes and fluctuates to, and then just to find out that the merger didn't go through, so my investment goes down more than 50%. I don't think so. I've already made a lot of those mistakes in my life, and I'm not trying to make those mistakes again by investing in not only a bad stock, but the wrong stock. And the crazy thing is that I had CCIV on my radar for a while now, because CCIV was supposed to be merging with another electrical, I think it was going to be a bus a manufacturer or something. So I've had them on my watch list for a while. And when I heard that this whole CCIV thing was happening with Lucid, I took a look at this and I said, wow, it was 10 bucks just a month ago. Now it's 17, 18, $20. So this one's a little bit too pricey for me, because taking that type of risk, maybe if you're gonna take 1% or 2% of your entire investment and put it there and say, look, I may lose half of this. If you're okay with that, then go ahead. But personally, I would just rather take the money and dump it into Ethereum or Bitcoin or something at this moment in time, because at least I know that eventually that's gonna go up, you know, until maybe I'll just park the money I would have parked in CCIV into something like Tesla or something that I know is a blue chip and is gonna do better. And then once CCIV and Lucid do make the announcement that they are gonna go together, if they do, then just take the money out of these other assets. Hopefully those assets went up in value, so that helps you get the other stuff cheaper. Does that make sense? Hopefully that makes sense to you guys. Now, the next thing that I wanna talk to you guys about is that Blackberry, for those of you who are Gen Z or millennials, might not know what a Blackberry is, but Blackberries were the precursors to the smartphones. And the reason they're on the scene is because they had this ongoing lawsuit with Facebook. They kept suing each other. I think it was like a back and forth suit party. And it ends up that I think the lawsuit was settled in BlackBerry's favor. So BlackBerry has a pile of cash right now, and it turns out that BlackBerry is no longer making unpopular phones, but now what they're doing is they're working on security for phones and security for automobiles. And it seems like they've been working with a lot of big automobile manufacturers. As a matter of fact, I think 8 out of the top 10, they've been working with them. So they do have revenues, and they do have a pretty decent balance sheet if you actually would take a look at it. So they're talking about BlackBerry actually making a big comeback, which I'm not 100% sure, but the stock did jump up by more than 100%. So you may want to check that one out and do some research on it. But personally, me, I am staying away. As a matter of fact, I am going to be probably raising my investment into Apple, which is the BlackBerry killer. Well, they're not in the same space anymore, but I'd rather be invested in Apple right now, because this upcoming Wednesday, Apple will be revealing like it's this big, ta-da, we're revealing something. This Wednesday, they're going to be publicly making available their earnings for Q4 of 2020. So they're expected to have out of this world earnings, guys. The earnings are supposed to be like record breaking, which is great, because pretty much every analyst out there, even the ones that are super conservative, have this stock price going up to as high as $175. It's at 140 right now. So pretty much Apple could be some easy money for you guys to take a look at if you're looking for something to park your cash into that's not high risk. So check this out. Apple is expected to have $24.5 billion in net profit. That's some pretty insane money, guys. That's a lot of iPhone 12s. So if you break that down, it's about $1.41 per share on $102 billion worth of sales, guys. That's buku bucks. That's a lot of money. If they continue on this pace, analysts are saying that they'll be the first $3 trillion company by the end of this year, guys. That's 3 trillion with a T. A trilly, not a billy. These guys definitely are setting the bar pretty high. But speaking of setting the bar high, we also want to talk about Tesla. They're also going to be revealing their Q4 earnings this Wednesday, which are expected to be through the roof as well. And because of all these expectations that are coming beforehand, the stock, guys, is like flirting with $900 a share. Personally, I don't know what to do. I mean, I keep trying to wait for the stock to come back down so I could buy it. But most recently, I've been giving a lot of my friends, you know, kind of like what I would do if I was in their position. I tell them, always take a piece out of Tesla, you know, always take a piece into Tesla, always make a good chunk into Tesla. And every time they do, no matter what price they buy it at, it's always one of their best performing stocks. I can't wrap my head around it. I'm just waiting for the day that Tesla have a 50% pullback so I can sell the farm and buy some more stock. Elon, if you're out there, make some crazy tweet so everybody thinks you lost your mind, so I can go in there and buy some cheap stock. But anyway, we know that won't happen anytime soon. Tesla is expected to have about $1 per share versus the 41 cents per share that they had 1 year ago on $10.32 billion worth of revenue. That's about a 39, almost 40% increase year over year. Guys, you know how big that is? Almost 40% for a supposedly automobile manufacturer that's supposed to go out of business like a dozen times. No automobile manufacturer now has a 40% growth year over year. That's just says volumes for what Elon is doing over there. And Elon's not only taking all of this money and spending it on, like, I don't know what he spends it on, because he doesn't have a house anymore. The guy, I think he lives out of Airbnbs now, or maybe he lives in his factories. I'm not even sure. But he just recently donated $5 million to Khan Academy, which, if you're not familiar with, shame on you. Well, I wasn't really familiar with them either, but I did hear the name once, I swear. Khan Academy is an online school for children who want to learn at their own pace, okay? Children who are not really capable of learning at a fast pace with maybe the majority of the kids in school. So he felt very, very passionate about this project and about this online school that he just wrote a check for $5 million through his Elon Musk Foundation. And I'm telling you this, guys, because this is the type of guy Elon is. Not only is he the richest man in the world, but he does these things because he's just Elon. I mean, he set such a bar. He sets such a high standard. The bar is so high just for human beings in general. I mean, I don't think there's like a day that goes by that I'm like, damn, how does this guy do it? So thank you, Elon, for doing that. You're an amazing human being, and we all thank you from the bottom of our heart. And Elon loves the kids, as you can see. And last but not least, I want to talk to you guys about Amc Stock. Well, they're a popular movie theater chain that I'm sure you guys have all been to before with your blind dates from Tinder or whatever you guys do on nowadays online. I have no idea. Well, you guys know that they're actually, I don't know about everywhere, but in the majority of states, we still do not have AMCs running or functioning. They've been shut down, and they just recently announced, when I say they, I mean the CEO just recently stated that they will by no means whatsoever declare bankruptcy. It is not in their cards. So they did the next best thing. They took on almost $1 billion in additional debt. Now, if you're an investor in this stock, I'm not sure, you know, if you are or not, but I would be thinking about investing in other things, not into the movie theaters, guys, because if you guys have noticed that there's been a lot of movies coming out now on streaming services, and I don't know about you, but I'd rather be home and watch that movie. Even if it's $30 for the movie, it's still cheaper than going to the movies where you spend $30 on popcorn. I mean, yeah, it's expensive, right? You got to go out, you got to pay for all you know, you got to get ready. It's just more convenient. I don't know. Do you guys agree with me? Do you think that watching movies at home is better? I mean, once in a while, I guess it would be, it's not such a bad idea to go out. But I think that after this whole pandemic that we've just all gone through, I think a lot of us have changed our standards, or not so much our standards, but the way we do things and, you know, what we call normal. So I don't know if being in the movie theater industry right now, or being in that business, is such a good idea, especially being in a company like AMC. They just took on an additional $1 billion in debt. Doesn't sound like a good idea, because the more you're adding, think about it. It's almost like you, if you can't pay your bills, you go out and you take a loan to pay your bills, but you still have no income coming in. Does that sound like it's gonna turn out any good for you? I don't think so. It's just, I'm trying to just kind of explain it in a very easy way to understand. I personally wouldn't be investing in them. I hope you guys aren't either, but I'm not telling you what to do with your money. You figure that out on your own. But it hasn't stopped people from taking that risk, because the stock has jumped up recently. Personally, I will be staying away like the plague, and I hope you guys do too. So thank you for joining me today. If you've enjoyed this, please consider giving this, you know what, don't even consider, just give this video a big thumbs up for me, guys. It would mean the world. And if you're new here, please hit that subscribe button and join the family of investors here, and also hit the notification bell so you can be alerted whenever we drop any new content. With that being said, guys, we'll see you on the next video. But before you go, if you want to see more of me, click on one of the videos on the screen right now, and we'll see you over there in just 1 second.